Hi friends, in this video I am going to describe about the dividend policy, which is most important topic in financial management. First and foremost, I would like to tell you what exactly the dividend. Basically, the term dividend refers to the part of the profits of the company which is distributed to the shareholders. Means whenever the company is earning profits, some of the profits will be distributed to the shareholders is known as the dividend. The term dividend derives from the Latin word dividendum, which means the things to be divided. So, dividend is a portion of the company's net profits or net earnings which are paid out to the shareholders. The investors basically have two desires. One, they wanted to have high percentage of dividends. Second thing, they wanted to increase in their investment. These two factors mainly influencing the dividend policies which are taken by the firm or company or any business organization. Then, having said that, let me go for clear cut meaning of the dividend and dividend policy and dividend decision. As I mentioned earlier, some of the divisible profits of the company distributed to the shareholders is known as the dividend. Right? What do you mean by the dividend policy then? The policy of management of a company concerning the portion of the profits to be distributed to the shareholders as a dividend or some portion of the profits to be retained in the company as a retained earnings. So, what exactly the dividend policy means, whether they wanted to distribute to the to the shareholders or they wanted to keep their amounts of the profits into the company, then dividend decision. So, if they wanted to have the dividend policy, they have to take the decision how much amount of the profit should be distributed to the shareholders and how much percentage of the profit should be keep it as a retained earnings, that is known as the dividend decision. Having said that, let me go for the what are the factors influencing the dividend policy. There are many factors which are influencing the dividend policy that will be affected by the dividend decision as well. The first and foremost, availability of funds. If any business is in requirement of the funds, then retained earnings could be the main source for the company. So they don't wanted to distribute dividend to the shareholders. Rather, they wanted to keep the profits into their firm as a retained earnings. Since it saves the flotation cost and further control won't be diluted in case of further issue of share capital. Instead of issuing share capital further, they wanted to keep their earnings as a retained earnings in the firm. That is the first thing. The first factor influencing the dividend policy. The second factor, that is the cost of capital. What exactly the meaning of the cost of capital? The minimum required rate of return by the investor from his investment is known as the cost of capital. If the financing requirements can be financed through debt, relatively cheaper source of finance, then it should be preferred to dilute more dividend rather than to keep it as an earnings. But if the financing is to be done through fresh issue of shares, equity shares, if it is a more, then obviously it better to use a retained earnings as much as possible. So here the cost of capital means if debt is a cheaper capital here, then you can go for the debt and distribute dividend to the shareholders. If debt and if equity capital and issue of shares is a more cost of equity, then obviously you have to better choice to keep your earnings as a retained in your company. Then the third factor is a capital structure. See, what exactly the capital structure? The combination of debt and equity ratio. So, an optimum debt equity ratio should always be under consideration of the dividend decision. And fourth one is the stock price. Stock price means the market price of these shares. Generally, a higher dividends increase the value of the shares and low dividend increase decrease the share value. So, depend on that, you have to take the decision in the company. Then the fifth one is investment opportunities in hand. Basically, the dividend decision is also affected and impact on the dividend policy. If there are any investment opportunities in your hand, the company may prefer to retain more from the earnings. Right. The next one is a internal rate of return. What do you mean by this? If you always think that if the rate of return is more, if the earnings invested in our company, then that will be the good factor for the business. So internal rate of return is more than the cost of retained earnings. It is better to distribute the earnings as much as possible. Then trend of industry. A few industries have seen by investors for regular income. Hence, in such cases, the firm will have to pay dividend for their survival. And the next one is a expectation of the shareholders. Right. The shareholders can be categorized into two categories: for those who invest for regular income and those invest for growth. Generally, the investor prefers current dividend over the future and long-term growth. In that context, if the investors go they wanted to go for the categorized in second category, then it is better to distribute dividend to the shareholders. Then legal constraints. So section 123 of the Companies Act 2013 came into the force from 1st April 2014. What exactly the it provision as far as the declaration of dividend is concerned? Dividend shall be declared or paid by company for any financial year only out of the profits of the company for any financial year or years arrived at after providing for depreciation, or in accordance with the subsection of the remaining undistributed, or, or out of both contest. Sometimes out of money provided by the central government or state government for the payment of dividend by the company in pursuance of given by that government. So here corporate taxation policy and tax position of the shareholders will also be considered. What exactly it means? As per section 1150 of Income Tax Act 1961, the dividend is subject to the dividend distribution tax DDT in the hands of the company. Under the existing provisions of the section 10 subsection 34 of the act, dividend which suffer DDT under section 115 is exempt in the hands of the shareholders. So the taxation policy will also influencing the dividend policy. The taxation under the Income Tax Act 1961 is basically will also be impact factor for the dividend policy. Right. Then effects of trade cycles, sometimes depression, recession, boom, and general trade cycles and business cycle will also affect the dividend policy. And attitude of interested group, if they wanted to go for the uh, dividend distribute to the shareholders, then they can go for it. Depend on the interested group, stakeholders means shareholders, how they are showing interest on that particular company. These are the different factors influencing the dividend policy. Having said that, let me go for what are the main types or forms of dividend policy. Here, there are different types of forms of investment policy. It is also known as a classification of dividend policy. Right. In this, first one is a regular dividend policy. Second one, stable dividend policy. In that, constant dividend per share, constant payout ratio, and stable plus extra dividend. and third one is a irregular dividend policy, and the fourth one is a no dividend policy. I will go one by one. First one is a regular dividend policy. This is what you call a company is having steady income may always prefer this category of dividend policy, that is a regular dividend policy. It means payment of dividend on a regular basis. Even if the rate of dividend is low, they always declare some amount of percentage of profits to the shareholders in every year. See, the focus on the regularity dividend payout on its rates, it always suits the investors who are retired persons, sometimes who the persons who always belong to the low income group, that at the time the company follows regular dividend policy. The main advantages of regular dividend policy: establishing profitable record, creating confidence among the shareholders, and it also good for the long-term financing and rendering financing easier, and establishing the market value of the shares, and the ordinary shares view dividend as a source of funds to meet their day-to-day living expenses. And the second one is a stable dividend policy. See here, the term stability of dividend means consistency or lack of variability in the stream of dividend payment to the shareholders. Here, stable dividend policy may be established in the following three forms: means constant dividend per share, constant payout ratio, stable repeat dividend plus extra dividend. So, here the category of dividend policy ensures regular payment of a fixed percentage. That is, a regular dividend policy is different, and this is a fixed percentage of company's annual income to the shareholders. In the regular dividend policy, they just regularly they wanted to declare the dividend, but whereas stable dividend policy, they wanted to provide regular payment of fixed percentage of out of company's annual profits to the shareholders. So it has first one is a constant dividend per share. Under this category, a reserve fund is created to take care of payment of fixed dividend to the shareholders. Even during that year when the company is not in a position to get profits, it is an inadequate revenue. Then still companies having a stable annual income fund for this policy suitable. Then constant payout ratio, it means fixed percentage of net earnings as dividends every year. And stable plus extra dividend means low rate of dividend per share paid to the shareholders on a regular basis. However, in the year of higher profits, plus extra dividend will is also be paid. This is what we call stable dividend policy. Some of the advantages of stable dividend policy: creates among confidence among the shareholders, regular income, and it attracts institutional investors, which are the foreign institutional investors. It is easy to raise additional funds, stability of the market price. It creates easy availability of debt funds. It also increases the reputation and prestige of the company. It provides details about the profitability of the company. It also facilitates profit maximization and maximize the wealth of the company, helps the company's shareholders in a positive manner. All these are the advantages of the stable dividend policy. What are the dangers? Basically, there are some disadvantages of this stable dividend policy. Once stable dividend policy is followed by company, it is not easier to change it. So, stable dividends are not paid to the shareholders on any account, including insufficient profits. Then the liquidity of the company may get affected. It also adversely affects the market price of the shares of the company. Then, the third one is a irregular dividend policy. As name itself suggests, as name itself indicates that irregular dividend policy, a company does not pay dividends to the shareholders on regular basis because of certain reasons. Some of the reasons may follow: annual revenue generation may by the company may be unpredictable. A company may be facing liquidity crisis, or it is not getting inadequate revenue. A company may be scared of giving regular payouts due to certain reasons of the company. The business carried out by the company may not be success, or may not be profitable. The company may not get adequate revenues in that particular year. So at that time, this is what we call the irregular dividend policy will be followed. Fear of all these things. Then, no dividend policy. So, at times, sometimes the company may like to keep entire net profit as a retained earnings to be utilized for its business growth or for meeting its working capital needs. What is the working capital? The capital which is required for day to day transactions is known as working capital. So, at that time, the company declares no dividend policy. Right. These are the different forms of the dividend policy. Then, what different forms of dividend now I would like to discuss? See, dividend can be classified into various forms because it could be equity dividend or preference dividend on the base of its shares. On the base of time of payment, it is an interim dividend, final dividend, special dividend on the form of time. But here, I am going to classify it on the base of medium in which the payment is made. So, in that, I am going to explain cash dividend, scrip dividend, bond dividend, property dividend, or stock dividend. Let us explain one by one. So, here, what do you mean by the cash dividend? When dividend is paid in cash, it is known as the cash dividend. The company may pay such dividends annually, off yearly, or quarterly. If it is paying annually, it is a final dividend. Off yearly, it is an interim dividend. It is a quarterly means quarterly dividend. So, a company must have enough amount of cash and retained earnings to pay cash dividend. The payment of dividend cash involves outflows from the company. So, what it is a dividend which is distributed to shareholder in cash out of the earnings of the business is known as the cash dividend. Then, scrip dividend. What do you mean by this? In a situation where the company is suffering from temporary liquidity crisis and has an adequate level of retained earnings, it may decide to issue scrip dividend in lieu of cash dividend. Scrip dividend may be issued either as a promissory note or ordinary shares. Issue of scrip dividends may result increasing the number of shares of the company, but there will be no increase in the value of the company. Number of shares may increase, but not. Issue of scrip dividend is sometimes opted by the company due to temporary liquidity problems. When the company is in a position to pay, if the company is not in a position to have liquidity liquidity, then what will happen? The company is going to opt for scrip dividend. The object of scrip dividend is to postpone the immediate payment of cash. Then go for the bond dividend. What do you mean by this? Bond dividend, it is a the shareholders may have to wait few months to convert their bonus into cash. In the sense, bond dividends may be defined dividend distribute that is to be paid share in the form of bond or debenture instead of cash. It is a fixed rate of interest for long duration. Issue of bond dividends is opted by the company under the same situation as that of this issue of scrip dividend and have the same impact. Then property dividend in the form of assets. See, property dividend is an alternative to cash dividend, scrip dividend, or bond dividend. It is rather an uncommon payout structure in which there is a transfer of non-monetary asset between the company and its shareholders on non-reciprocal basis. This is a non-monetary asset may be in the form of inventory of the company, shares of the subsidiary company, sometimes real estate they are going to pay. Then the last one is a stock dividend. So sometimes when company profits when the company gets profits substantially, it may decides to retain the part thereof the capitalized and retained in the business perpetually permanently by issuing stock dividend. So additional bonus or shares in lieu of cash to the existing shareholders. Under this process, asset distribution is not involved and each shareholder's interest in the companies remains unchanged. The total shareholders' equity also remain unaffected. Stock dividend is beneficial for the company. It has a positive effect on its liquidity management due to absence of cash flow. I am going to give you some of the advantages of the stock dividend particularly. So for issuing company, it is a maintenance of liquidity position, satisfaction of the shareholders, enhanced prestige, reputation, widening the share market, conservation of the control, financing for expansion program. All these are the for issuing company. For investors, increasing the equity, increasing income, increased demand of the for shares, increased marketability of the shares. Some disadvantages are also there. Increase in capitalization of the corporation, more liabilities on the company, prevents investors and undiluted control over the management. As far as the for investors is concerned, disappointment of the shareholders, lowers the market value of the existing share. So these are the different disadvantages of the, what are the main objects. So it is a conservation of cash, financing expansion program. The enhanced main objective of the stock dividend is just they wanted to enhance the prestige, widening the share market, transforming the formal ownership of surplus and reserves to the shareholders. They wanted to distribute in the form of shares to the dividend issue in the form of the shares. So these are the different objects of the stock dividend. Then what exactly the main conclusion, the points to remember is an optimal dividend policy can maintain balance between the business growth and maximization of its shareholders wealth. It is a decisive force for shaping the market value of the company, because market value of the share will always will be impact a negative manner if the rate of dividend distributed by the company is low. So an adequate level of retained earnings is necessary if a company with a view to focus on improvement its financial health, implementation of the growth, expansion purpose, modernization, diversification, renovation of the company is always better to make a optimal dividend policy in a every organization. This is what exactly about the dividend policy. Thank you. Thank you for watching. Thank you for staying with me. Thank you for your support and encouragement. Thank you. Thank you, one and all.